Good evening. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday. And we're sitting here now at the 16th of April, 2025. Remember, tomorrow's the last trading day of the week since the markets are closed for Good Friday. So keep that in the back of your mind. In terms of news for tomorrow, you're going to get the Philly Fed Regional Business Activity Index at 7:30. They're looking for a small decline. We're looking for declines on starts and building permits at 7:30 a.m. And jobless claims are expected to go up 2,000. We'll see if those numbers come in. Now, obviously, you all know about what happened with Nvidia, with the Trump administration now saying they have to get licenses to sell their low-grade H20 computer chip. By the way, they call it a chip. It's the size of a small car, but that's what they call it. And when you look at what they did, they took a hit of $5.5 billion. It sent the stock market on its just going down. AMD took an $800 million hit from the same reason. Then we saw Fed Chair Powell today, and he came out, and if you were watching the broadcast of it at 12:30 p.m. Central Time, as he was in Chicago at the Economic Club, very simply put, the Fed isn't coming to the rescue anytime soon in this market. They need time to digest it. The tariffs keep changing. They're looking at what's going on. The Bank of Canada saw the same thing. So the gold market took that as one bullish, very bullish sign, and up you went. You're at $33,058. Reminds me of what Bitcoin was doing. It's every day it's adding value. The silver and copper are not able to keep track with it or up with it. Same in the platinum. They gained today, but it's just pulling away on its own. At the same time, the dollar is up a little tonight, but it's back to the 99 level, and you're pressing again the 115 level in the euro. So dollar's out of favor. Interest rates tonight, fairly steady, not doing an awful lot, but they've been rallying a little bit. In other words, the futures, which means the yields have dropped back a little bit. But it's very strange when you have all this uncertainty for the dollar to plunge and the yields, people running into the bonds, and they're doing that right now, and the two don't go together the same way. That's strange, very strange. When you look at the gold, what can you say? You're up now $122 for the week, almost $123, up 3.81%. When you go to a daily bar chart, look at how this market has just run away. I mean, when it got through here, it stalled, and then as it popped through, it just never looked back. It formed a small wedge here and then just accelerated out of that one more time. This type of rally also says that when you do correct, be ready. It will be one heck of a correction in this market, and it'll come fast and out of nowhere and probably not last that long, but it could be very nasty. I've seen this type of run before, and that often goes with it. So you're over all the key moving averages, which leaves only one number that could be resistance, and it's the upper Bollinger Band, and the market hit it, backed under it, and now it's running right on it. That's another bullish sign. It might even cause an embedded situation right here. So trends up, bias up, market gone, a lot of risk on this trade. The gold-silver ratio is not budging. It just stuck here against, let's call it the 102 level. Been here, done that. It's just going sideways right now. Silver market has come up in the July silver to the point where it's trying to hold here now the 18-day average of closes. It's a pretty interesting move. Higher lows, higher highs. Got to see how that market wants to play itself out right there. I don't see anything that makes me want to say, hey, I'm going to tell you, because gold's gone, buy silver at 32.84. Tell me where you put your stop. And it's got to be under the last break low. That's too far away, too much dollar risk. In the copper, getting pulled along higher with all the metals and the inflation story. But is that enough? I have my doubts. Looks like a bear market rally still to me. 18-day average is the target. Platinum market managed today on the close and yesterday, got over on Tuesday. The 18-day average went today to the 100. If it continues to go, maybe the 200, but it's not the play. The play has been the gold market. So all these others, if they come up, they're the secondary markets, not really acting that strong. And here's the crash that it's taking place. You know, don't you wish you can go back 90 days? President Trump, that dollar's too high. Interest rates are too high. He wasn't quite right on that. You're going to take pain in the stock market. He was right on the money with that. And you put it together, and this is where you're at right now. Now, what we don't know is what was due tomorrow, because every day is something new, and it's so difficult to try to figure out how do you make a plan if you're a businessman. And as a trader, carrying a position overnight, you wake up in the morning and something was said and the market has just gone on you. You know, for those of you that follow what I do here, you might want to take a look at using this on TradingView. If you have TradingView, it only takes up 2 slots. You go to iRepstein.com and you go to the client resources on the top right. It's right in there. You sign up. We put it in for you. We turn it on. You get an email and you get all my indicators. You're going to get the swing lines, the moving averages, my version of slow stochastics, Bollinger Bands, and outside days will light up on your chart. You can turn that feature off as well, by the way. But it's so important. It's nice to see when you have an outside day because they're so important. Again, you go to iRepstein.com. Client resources, you can move your cursor to the top here. There'll be an icon. Give that a click and it'll take you there. I'm Ira. I'll catch up with you all tomorrow. Take care.